Good afternoon, ladies and gentlemen, and welcome to the TRANSENSE TECHNOLOGIES PLC final results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Simply type in your question in the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish answers where it's appropriate to do so. These will be available via your Investor Meet company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand over to Nigel Rogers, Chairman, and Melvin Segal, CFO of TRANSENSE TECHNOLOGIES PLC. Good afternoon.
Hello. Hi, Mark.
The floor is yours, sir.
Thank you very much. Nigel Rogers speaking, and hello everybody, and thank you very much for joining this presentation. I see that we've had a good list of attendees, so delighted to have everybody on board and looking forward to presenting to you. We've got a presentation which we're going to aim to get through in sort of 20 to 25 minutes to leave plenty of time for questions. And we've had a few pre-submitted questions which Mark will take us through once we've been through the presentation. So the structure of the presentation, I'm going to talk a little first about highlights for the financial trading year to 30th of June FY20, the commercial activities that we've undertaken during the year, and most importantly, a breakthrough moment with our Bridgestone transaction, which many of you will be familiar with. I'm conscious that there will be some people on the presentation who are seeing the company for the first time also, so we'll have a bit of a recap of our technology within the business, and a bit of a description of our operations. Melvin will talk about financial highlights for the prior year, and then I think the real meat of the presentation is about our strategic plans for the business going forward, particularly with our surface acoustic wave technology, and then we'll wrap up with some post-period highlights and an outlook, and as I say, hopefully plenty of time for questions. So moving first of all into the highlights for financial year 30 June 2020, then clearly the major highlight was the move of the Itrack technology away from being an operating business to a licensing model with Bridgestone Corporation of Japan, which was completed in the last week of the financial year. And that really was a breakthrough deal. For those of you listening who were familiar with the structure of that deal, it really does make a massive difference to the risk profile for investors in our company, because it removes a business in which we were investing overhead in order to grow into one which is providing a royalty income stream and no overhead. So quite transformational, and actually enables the financial self-sufficiency of the company as a whole going forward. So that has enabled us to look at the surface acoustic wave business in a different light, where rather than feeling the need to raise money from investors progressively to invest in that technology, we can now see a clear income stream coming into the business which can be invested in that technology. And I'm going to talk a little bit about how we will allocate capital and what our plans are as I go forward in the presentation. It's also brought the need for commercial success in the surface acoustic wave very much to the fore in terms of board and management focus. We have new leadership in the business. We've got a new managing director for our SAW business and much closer board attention on that business. And I'm going to talk a little bit also about our new commercial advisory panel, which is at the final stages of formation in order to provide sector insights into methods of deploying surface acoustic wave in our target industries, which again I'm going to talk about in the presentation. Putting that all together, I think that the business has a very bright future, and that's expressed in our confidence by proposing at the AGM in December changes to our capital structure, which will free up distributable reserves and enable us in the future to consider both payment of dividends and share buybacks out of available cash from profits. So I think that's a clear indication of confidence. So a quick recap of our company strategy, aimed, I guess, partly at people on this call who aren't familiar with the company. But the company has a track record of innovation and developing applications for sensing technology. And over the period of the last 10 years or so, there have been 4 principal technologies which are listed there at each of the 4 column headings. And as we've moved from seeking applications to the commercialization stage, you can see that 2 of those technologies have now gone into realization. IntelliSaw was an outright sale to Emerson Corporation in 2015, and we've now monetized the Itrack technology through our licensing model with Bridgestone. And that leaves commercially active under our own control, our SAW business and Translogic, both of which we'll cover today. Just as a recap of what those businesses do, our surface acoustic wave technology is an extremely specialized measurement of torque, pressure, temperature, strain, or thrust, using very compact electronics, which are very rugged. They require no wires and no battery source, so they can be positioned in awkward places, rotating shafts, for example. And they provide very rapid and very accurate real-time measurement of those measurands. And it's sufficiently rapid and accurate that it can be fed back into control electronics and used to control the machine that they're attached to, whether that's an aeroplane engine or an automotive application or an industrial turbine. And so they can be used to control power output input, and they can also be used to improve efficiency. I'll again talk a little more about that technology as I go in. Meanwhile, in Translogic, we have a set of industry standard tire inspection tools. So these are tire probes which can read the tread depth and tire pressure very rapidly. And using Bluetooth data transfer, they can put that into specialized suites of software so that they can be incorporated into fleet tire management systems. And as you can see from the brand names on this page there, they are adopted by some of the major tire manufacturers in the world as part of their own suite of tools. I'll just pass to Melvin now, if I may, now that you're orientated, and ask him to run through the financial highlights and the structure of the Bridgestone transaction, please.
Good afternoon, everybody. Well, the major financial highlight of the financial year 20 was, of course, signing the licensing deal with Bridgestone, and at the same time transferring the operating business of Itrack over to Bridgestone. And therefore, our P&L this year looks very different, because the Itrack business is now treated as a discontinued operation with a single line result of 1.45 million loss at the bottom of the P&L. Focusing, however, on the continuing business for FY20, which is made up now of just SAW and probes, the revenue of 600,000 was in line with the previous year. And for FY20, it comprised of 510,000 worth of revenue for probes and SAW 90,000. Although one should be mindful that SAW also had grant income of 120,000. The EBITDA from continuing activities was a loss of 680,000, a small improvement on the previous year. And before moving on to the next point, it's important that both those numbers be looked at in the light of the fact that a continuing activity from July 20 onwards will be the royalty income from Itrack IP. And these start, as we've mentioned in the past, at the rate of 600,000 per annum. If you then apply that to the above numbers, you effectively double the continuing revenues and you bring EBITDA very close to break even. The net loss after tax was 1.09 million. And 2 points to note regarding that is we had a very detailed patent review before the year end and decided that certain patents, many that related to TPMS using SAW, were not worth keeping any longer, so we abandoned them, and that involved a write-off of 120,000, which was incurred in that year. But that then in turn will produce a cash saving of over 100,000 over the next 5 years. The other point to note is the amortization on the Itrack R&D was 200,000 in FY20 on the basis that we were writing off the R&D over 3 years. However, following the deal, which was a 10-year deal, the future balance of R&D will be written off over 10 years, reducing the charge to around about 45,000, therefore producing 155,000 per annum saving. The Itrack assets were transferred, and I'll discuss that on the next slide. And at the bottom here we have the year-end cash, which I'll round to 1.2 million. And as I write, we're sitting on 1.3 million. And whilst cash balance is below 2 million in the past, would have been a red flag to me regarding going concern. The current cash burn and the future anticipated cash generation no longer make this relevant. So if I now move on to the next slide. This is a brief summary of the Itrack transaction. Now, I'm going to try and cover this far quicker than we did with Bridgestone, because we started talking to them in April 2018, believe it or not. It took us till August 2019 to agree the collaboration agreement, which in turn gave a 6-month slot to February 20 to do a deal. And as everyone knows, that February 20 slot was extended, I think, 3 times, and we finally did a deal in June 2020. Because it was so late in June, the deal actually straddled the year end, in as much as we had to agree the various balances with Bridgestone, and they were agreed sometime in September, and the final payments were made then. So what I've done here is, in the table on the left, I have just summarized the deal, which I won't run through, but you can see all of the numbers. The dollars are there because the deal was designated in dollars, and I've given you the sterling equivalent. And on the right-hand side, I've redesigned the balance sheet to extract the million or so that was due from Bridgestone and the 975,000 that was due to them in respect to the loan, and just treated it as a single figure. What's important on this page is that quote that is there from Brian Goldstein, who's the president of Mobility Solutions and Fleet Management for Bridgestone in America. I'll leave you to read the quote, but the 2 important points in that quote are that he recognizes Itrack to be best in class, which confirms everything we always believed, and that he intends to integrate the Itrack system into the Bridgestone Mobility Solutions system, which is very positive for us. At the foot of the page, you'll see that the Itrack income, as I've mentioned before, starts at 600,000 per annum and is growing. I will pass back to Nigel to talk about the prospects.
Thank you. So people who joined the last time that we made this presentation will be familiar with this page. I'm just going to run through it quickly again. So what this column graph shows here is the number of mine trucks of ultra size. So these are the very largest size of mine haul trucks, and shows how Itrack has gained market share under our own ownership prior to the Bridgestone transaction. And our market share after a period of 3 or 4 years was built up to 4%. You can see that the BTAG system had already achieved 13%, despite the fact that it was technologically far inferior. And that was the primary reason why Bridgestone were interested in collaborating with us initially, and then ultimately doing the license deal. So the growth potential in this area for our royalty, which starts off, as Melvin has said, at about £600,000 a year, already in the first quarter of the existence of that license, we've seen around 10% growth in the royalty just for the additional trucks deployed in the first quarter. So, it follows that looking at a 2 or 3 year horizon, where our current market estimate forecasts are actually published in the market, and many of you will have seen them from our brokers, even just the transfer of BTAG business to Itrack over a 2 or 3 year period would double the royalty and then double it again, from the current rate to something more like £2.5 million per annum. And we think that that is an extremely conservative starting point for the opportunity that that technology actually has in the market. Now, I'm going to pause there, and I'm going to come back to this as part of the Q&A, because I know 1 or 2 of the questions have been focused in this area, and I think it'd be better to respond to questions rather than labouring the point on this page. There's some more information in the appendices I'll refer to later. So I'm now going to talk about our surface acoustic wave business. There's a lot of information on this page, and that's partly for people to read who aren't coming online. but essentially this is an explanation or a recap of the technology, in which our resonators, surface acoustic wave resonators, which are very compact and rugged and can be deployed in various ways to make very accurate measurements of certain measurands on the operation of equipment or machinery. And up to now, there has been some commercial success with this technology, particularly with General Electric on the Itraq program, which was the program whereby they're going to re-engine all of the US Army's military helicopters, and also in motorsport, including NASCAR and IndyCar and other race formats. But those commercial successes have been relatively low volume, high price. And as yet, there has not been success in penetrating higher volume markets, which would really move the dial as far as investors are concerned. And so now that we have this luxury of a business which is financially self-sufficient, and we have income coming into the business which needs to be either returned to shareholders or deployed in the business, then it moves the dial in terms of making decisions as to how to invest in the SOAR business. We've brought on board a new managing director in the last few months, and we've all worked closely together with him and other members of the management and board to put together a strategic business plan in which we thought very carefully about what SOAR actually offers the marketplace and in what areas it can generate significant savings for customers, which in turn can turn into income for us. And so I've set out here the summary of that strategic plan. Our short-term objectives under that strategic plan are to identify means by which, through prototyping, non-recurring engineering charges and grant income, this business can become financially self-sufficient in its own right, i.e. not rely on Bridgestone royalty income to fund its overhead, but actually eat its own kill. But then longer term, our clear objective is to find strategic alliances with large companies to look at licensing transactions similar to the Bridgestone deal to be able to generate seven-figure revenues in this business. And we thought very long and hard and targeted 7 specific areas where we think that SOAR technology has got something unique to bring to the party to customers in this area. And in many of these areas, we've already identified and worked with customers. Some of them are more new, but you can see on this page motorsport and aerospace and avionics, where we've already had the successes that I've described, but then targeting electric vehicles and hybrid engines, electric power assisted steering, industrial turbines, gearboxes, hydrodynamics, green energy, wind turbine, wave turbine. So we've narrowed down the field into specific sectors where we want to set out specific commercialization plans. And in order to assist us in that process, we've reached into our own network of contacts to find thought leaders in these sectors, and we've invited them to join a commercial advisory panel, which is now up and running. And these people have a lot of talent and a lot of experience and a lot of contacts to help us guide and prioritize our commercial activities. And I'm very optimistic that over the next 12 to 18 months, we will see a substantial increase in the inquiries and opportunities for this business. I'm going to ask Melvin to talk about Translogic and probes, and then move on to talk about post-period end highlights, please.
Thank you, Nigel. I will run through the probe fairly quickly so I can spend a little bit of time on the post-year end highlights. The probe business was acquired in 2009 for a cost of £50,000, and the business was based on a tried and tested probe which used Bluetooth to communicate to systems, time management systems used by OEMs. The original probe became our Gen 1 probe and is used in the time management systems of Goodyear, Michelin and Bridgestone, as well as many software houses that integrated into their time management systems. We developed a more intelligent probe, being the iProbe, to read a new emerging intelligent tyres with TPMS and RFID tags fitted. Whilst it gained some traction, the iProbe was clearly ahead of its time, and only now is the real demand becoming apparent. And we've recognised this by developing our new, what we refer to as our TLGX probe, which is a modular probe with 4 iterations ranging from a single tread depth reading right the way through to tread depth, remote reading of TPMS and RFID tags. I now go on to the next slide, which I want to spend a little bit more time on. The post-year highlights, and I'll also refer to the current research notes, one published by Allenby Capital, which are available on their website and are our new brokers whom we're very excited to be working with. And there's also one by FinCap, which you have to, I believe, register with FinCap to access, who were our brokers for 5 years and whom we remain on very good terms with. First point to mention is COVID. This is kind of a sword of Damocles hanging over many businesses and has led to wholesale downgrading of different companies' forecasts in the market. So far as concerns TRANSENSE, we have not been particularly affected by COVID, either operationally or from a revenue viewpoint, but we need to be mindful of it. And for this reason, we retain the status quo with our numbers that are in the market to FY23. And these were first put in the market by FinCap in June 20. And you'll see from the numbers in the Allenby Capital research note and FinCap's that the current numbers are broadly in line with those original numbers. Having said all of that, I am feeling very optimistic about all 3 sources of TRANSENSE income. Starting with Itrack, Nigel has a very good line of communication with ATMS, which is the company that acquired the Itrack business and is a subsidiary of Bridgestone. And this is through Nigel's involvement as a board member of that company and attending quarterly board meetings. With regards to myself, I've got a 30-year-long business association with the ATMS CEO, David Ford, and I am in fairly regular contact. The ATMS forecast numbers, which we believe to be prudent, are based on real opportunities. However, they still exceed the research note numbers, which up to round about the beginning of 2023 only reflect, from our perspective, replacing existing BTAG with Itrack kit. The latest ATMS forecasts demonstrate that there are, in addition to the low-hanging fruit of the BTAG replacements, very many new opportunities. This is very positive for TRANSENSE, and we should start seeing the real impact of this in Q2 to Q4 this year, although Q1 royalties were already 8% above our base numbers. Talking about the probes now, the best year for probes was in 2018, where we achieved a level of income of 840,000. We saw a reduction in 2019, and the Translogic business was very much Itrack focused in that year, hence the fall in probe income. The revenues improved by 8% in financial year 20, and the current annual run rate in Q1 of this year would actually exceed the projected numbers we have in the market for FY23. So if we can maintain this current growth level and interest in the new modular probe, we are confident that we can raise revenue levels close to the 1 million mark in the forecast period. Finally, SAW. Nigel has spoken extensively about the changes in SAW with the introduction of Nick Hopkins as MD and the formation of the CAP. The projected contribution, which I regard as the gross profit less the direct salaries, is negative throughout the 3-year research note forecast. However, we are confident this can be turned around by year 2 and present a positive contribution by year 3 or even the end of year 2. To demonstrate the improvements, the unaudited results in Q1 show us performing at break even, which is a marked improvement on Q1 financial year 20, where we incurred a £600,000 loss. Now, Nigel is always very keen on analogies, and I know he's dreading me saying this, but I have an analogy which compares TRANSENSE up to the 30th of June 2020 and TRANSENSE post the 30th of June 2020. And it's like comparing a caterpillar, not the truck, the insect, with a butterfly. The caterpillar is sluggish and not so good to look at. The butterfly obviously flies through the air and is very good to look at. And the important thing is one is derived from the other. So without the caterpillar, we wouldn't have the butterfly. And the current business of TRANSENSE to me is a butterfly. So to end off, my current feelings are that I am cautiously, and that's only due to COVID, very optimistic. And I'll pass back to Nigel. Thank you,
Melvin. And a very colourful analogy. Perhaps we should have had a picture. I'm actually going to take a pause now. The next slide is a bit of a wrap-up slide, and I think it might be better presented after we've taken a few questions. I've seen that there's some questions actually coming through on the feed bar now, which I'd like to deal with, and I'm conscious that there was one or two submitted in advance. I think I'll take the ones on the sidebar first, if I may. So I'm going to first of all talk a little bit more about the Bridgestone deal, and I'm going to pick up some questions by Tim G. Tim, thank you for your questions. So he's asked a couple of questions. One is, when you were negotiating the Itrack deal, did you explore looking at extending the agreement beyond 10 years? And why didn't you opt for a longer term? And secondly, will Bridgestone offer Itrack to mine operators who fit other manufacturers' tyres? I think they're both really good questions. So I'm going to take them, and I'm actually going to take us forward on the presentation, if I can navigate to it, to some things that are in the appendices. I actually have 4 pages in this appendix to the presentation, which you'll be able to look at in detail later. They're very busy slides, but these are lifted directly from the Bridgestone Corporation interim results presentation and mid to long-term business strategy. So this was delivered by the Bridgestone chief executive to Bridgestone's own investors. And bear in mind, this is a 24 billion turnover operation in August. These slides are actually available on Bridgestone's website if you want to have a look at them with an English translation. And I've picked 4 slides out of the presentation particularly. It was about a 40-slide presentation, and I've picked 4 out particularly. This one was part of the strategy where he was explaining that Bridgestone view their core business to be selling rubber, but all of their growth will come from selling solutions, and particularly digital solutions, to support their rubber business. And as you can see here, although it's in very small text, right front and center there in the middle of this page is Mining Solutions, Itrack Solutions business. So this is clearly embedded in Bridgestone's growth plans for their mining business. I mentioned in passing as well on the left-hand side of this page, Digital Toolbox, which is actually the fleet management system, which also incorporates use of our probe. But that's somewhat incidental to the point I'm making now. On the next page of the strategy update that Bridgestone presented, they explained their new mining tyre offer. And this is a tyre called Master Core, which they are rolling out to all of their mining customers worldwide. And this picks up one of Tim's questions. Because the Master Core product, one of its key selling features, which makes it, to use Bridgestone's terminology, Dan Totsu, or the clear market leader, is that it's customizable by the client. So once they've fitted the tyre to their trucks, they can determine whether they opt for durability or maximizing vehicle speed or payload, or in practice, a combination of those 3 things. And the working characteristics of the tyre can be amended to optimize its performance. Well, you can only optimize its performance if you can measure it, and you can only measure it if you sell it alongside Itrack. And this is their marquee new product for mining tyres for the next 10 years. So it's quite clear, and it's even more clear from the next page. Itrack got a whole page of this presentation all to itself, despite its relative size, that the Itrack system is integral to the sale of Master Core tyres, and Mastercore is a major step forward for Bridgestone's mining business. The fourth page out of their presentation shows the scale of what they've already achieved with Mastercore. It's already active in 43 mines around the world and is being rolled out worldwide. I mean, I'll comment that 43 mines worldwide is significantly more than we were able to achieve from our own modest base on Itrack. So I think that we can have a great deal of confidence in the premise that a share of Bridgestone's business is worth massively more than 100% of our own business. And picking up your question, Tim, about the duration, I would rather have a relatively large share of their business for 10 years rather than a minuscule piece of their business for 100 years. So in negotiation, it was all about the rate versus the duration. And our feeling was we'd rather have a higher royalty rate for a shorter period of time. I'm just going to skirt down and see if there's any more Itrack questions. Right, I'm going to move on to some questions on Sourcesense then, because again, I think these are really topical and well asked. John R asks, with regard to commercialization of SOAR technology, given that we've had potential game-changing deals and opportunities in the past, do we think it'll be different this time, or is it just a nice technology that can't be commercialized? You know, John, I think that's actually a really good question, and it's one which I will answer far more clearly in 12 months' time than I'll answer right now, because the answer is, you know, until we deliver and actually put some meaningful numbers into the P&L account and the bank account, then we're not going to know the answer to that question. What we're not going to do, though, is fritter away royalty income on investing a business in which we don't believe. And so we're going to give it a really strong push for 12 to 18 months. But we're not going to put a lot of money into that business without being very hard-nosed about how quickly it comes back out the other side. And we're only going to deploy shareholders' funds in surface acoustic wave if we think that we can deliver strong growth and a better return on investment than we could by returning that cash. And that ties in also with a question from, I beg your pardon, it's John again, who essentially asks the same question. I fear we'll get to the end of the royalty period having spent all the royalties and have no profit earning business to show for it. Well, John, that's not how I run businesses. The simple truth is we will only deploy income from Bridgestone's Itrack royalty into SOAR if we think that we can do better than you could do investing this money in another company. And if we can't, we will return money to shareholders in one form or another and allow them to invest it elsewhere.
Nigel, perhaps I could just jump in just while you just take a few seconds to review through those Q&A that have come in during the event, and obviously ahead of looking at the pre-submitted ones. And if I could just remind investors, obviously they can continue to submit questions using the Q&A tab. Simply just type in your question in the box below and press send. Obviously the company review all those questions submitted today, and obviously we will obviously address those or review them post the meeting. I'd also like to remind investors that a copy of the presentation along with the recording and the published Q&A can be accessed via your Investor Meet company dashboard. And also after the presentation is finished, that you'll be redirected for the opportunity to provide feedback, which is incredibly important to the company, and we'll be very grateful if you would be able to complete that for us. Nigel, if I just hand back to you perhaps, and then just let me know when you want me to start off with those pre-submitted questions.
Sure, thanks, Mark. A couple more questions from Tim G, which I'll take off the sidebar now, and then perhaps we'll come back to the pre-submitted because I want to make sure that we have time to deal with them. So Tim asks, how long do you estimate it will take before the SOAR division becomes self-sufficient, i.e. cash flow positive? Well, the answer to that is that we've set ourselves a target to do that within 12 to 18 months. And management are incentivized on that basis in the SOAR business. We have every belief that we'll be able to do that. And that's a plan which we have set out internally and which I'm quite happy to share publicly. Tim also asks, moving to the probe business, what opportunities do you see in developing the recurring income for tyre probe business rather than through one-off sale of probes? I mean, in fact, most of our probe business is recurring income because it's a relatively speaking lower ticket price item and consequently sells through distribution to recurring purchasers in many territories, or direct to end users who reorder in quantity. So it's a bit different from the SAW technology or from the Itrack royalty, where moving towards a subscription model was more attractive in those businesses than it is in probe. So we expect to see recurring business coming from the sale of tyre probes. Wouldn't rule out looking at subscription models in the future, but it's not something that we've done thus far. I've got a question as well from Martin S. Could you tell us a little bit about the type of people that you've attracted to the new advisory panel? Again, a great question. I mean, we have drawn these people from our own network of contacts, but they've all worked at very senior levels, mostly chief executive level. They have typically engineering commercial backgrounds as opposed to being accountants by birth like myself. So these are people who've spent a lot of their time either in engineering or commercial, sometimes both, but they've operated at a very senior level. I would imagine that within a relatively short period of time, we'll be in a position to actually provide biographical details and name names, but at this early stage, we're not in a position to do that right now. But I'm very confident that these are people who have a very long track record and a lot of talent, expertise, engineering ability, and contacts in our target market sectors. And they've been specifically drawn because we believe they have insights into those target markets. We had a first round of meetings with them one-to-one last week, which went extremely well. We had a 100% sign-up rate of the people that we wanted to join, and we'll have our first group meeting early in December. Mark, perhaps we could run through the pre-submitted questions, please, now.
Thank you very much. Obviously, investors have had the opportunity to pre-submit questions, and we've got a number of those just to address to you, if we may. The first one is, how many employees are on the payroll? Are there still engineers employed by TRANSENSE working on non-Goodyear opportunities?
Yes, I assume that means non-Bridgestone opportunities, but I understand the question. So the answer is yes. I mean, one of the big advantages of the structure of the deal with Bridgestone is that they are now responsible themselves for product development. So that frees up our own engineering resource to work exclusively on SAW and to a lesser extent on probe development. Largely that development's complete now. So our company headcount today, including a board of 3 people, is 14. We're a pretty lean organization, and 6 of those are engineers or technicians. All of those working on development of SAW technology and supporting probe business.
Thank you. And I know you've touched on a number of these points, but just if you could expand where it is appropriate. The second question is, I hope you'll be able to update us on the current annualized royalties being received from Bridgestone. I'd also like to know the frequency and timing of the updates and payments that TRANSENSE receive from Bridgestone. I hope you'll be able to report on the progress with GE.
Okay, I'll take Bridgestone first. I think I've probably covered most of that already, and so has Melvin. But in terms of frequency, the deployment of trucks is reported to us each month. The royalties are paid quarterly, and I attend a quarterly board meeting of ATMS, the Bridgestone subsidiary, as a TRANSENSE representative in order to get feedback of their future plans. So, as I think Melvin has already alluded, we're pretty close, and we get very frequent feedback from Bridgestone. We've got an excellent relationship with them. Moving on to an update on GE, just very briefly, the GE ITEP program, which is the gas turbine engine replacement program for US Army helicopters, has been through 3 critical design reviews during the financial year FY20, all successful, and it's going to first engine to test review in Q3 of 2021. So that'll be the first live assembled engine to go through test build. So we will see our first royalty payment in FY21.
Perfect. Again, I don't want you to keep going over things, but obviously this question came in ahead of the presentation. But the question reads, when negotiating future royalty deals, please include some form of inflation proofing. Whilst inflationary spikes have been rare in recent history, when they do occur, they can be devastating. It would seem sensible to safeguard our future income against that risk.
I understand the point. I would certainly bear it in mind. We did consider it during the Bridgestone negotiations. I think the world, the way that it is now, is perhaps more at risk of deflation, and I'd prefer to have a fixed price, but that's personal opinion. But I certainly recognise that. I think as well, in future royalty transactions, I would expect that to be inbuilt, because I would expect them to be a percentage of revenue, and revenues would generally inflate. And normally in a royalty transaction, you'd also have the obligation to maintain the IP, and consequently you'd have the costs to offset against that, and would need a degree of inflation proofing of your revenue to cover the increase in costs. The Bridgestone royalty was rather different, so a fixed price was more appropriate, because we don't actually have any overhead to keep the know-how up to date. That is Bridgestone's right and responsibility under the deal.
Thank you. Just a couple more questions, if you may. Please update us on the progress of SourceSense within other GE divisions outside the helicopter application.
Yeah, great question. It's probably our single most active commercial activity at the moment, to be able to look at other opportunities within GE, not only in GE Aviation, where we have good relationships, but also in other parts of GE and their industrial business, and particularly in their central research centre. Nick Hopkins, our new MD, has done a great job of keeping all of our existing contacts warm, whilst at the same time meeting new people within GE. He's obviously limited from being able to jump on an aeroplane and go and visit them, which is very frustrating, but he's made the most of the technology that we have available to both maintain existing contacts and build new ones, 1 or 2 of whom look very interesting indeed.
Perfect. And finally, how is Itrack rolling out?
I think we've probably covered that, if I could be so bold as to say so.
That's fine. Thank you. I thought I would ask it because people have submitted it. So thank you very much for that. Perhaps, Nigel, before wrapping up, if there are any other questions that have come in via that Q&A tab that you want to address, please do. If not, if you wouldn't mind perhaps just wrapping up. I know feedback is important to you, and then I will redirect investors to provide the feedback for you.
Thank you very much. There is one more question appeared which I want to address, and that's from Brian K, who says, on ADVFN, which is one of the bulletin boards that follows TRANSENSE, there has been talk about raising money through a rights issue. So can you rule out any fundraise short term? Brian King, thank you, Brian. The answer to that is absolutely yes. I mean, everybody's entitled to an opinion. My own personal opinion is that our paper is now very dramatically undervalued, and the thought of spending our paper on doing anything at this valuation is abhorrent to me. And until we consistently communicate this message to a marketplace that receives it, understands it, and revalues our stock, then we won't be issuing shares to anybody. You will notice that I've almost doubled my own personal shareholding, taking the opportunity to buy shares at a valuation which I think is massively less than the business is worth.
Perfect. Well, as I say, Tim, that probably concludes the Q&A session. Perhaps just some final words, and then I will redirect investors for feedback.
Okay, so I'm going to just scroll back up to the conclusion page. To wrap up and talk about the outlook for the business, the company is now radically de-risked. We're not in a position where we have to expend overhead and incur losses and raise money in order to have a platform to build from. We've got a very strong financial position today. We've got positive cash inflows coming into the business, and we have visibility of those cash inflows growing substantially over the next 2 or 3 years. So our challenge now is the deployment of that income rather than raising capital. We think that the prospects for the growth in our royalty income under the Itrack transaction are very significant over a 10-year term. And consequently, we've injected fresh management, a very strong commercial focus, and a fresh look at how SOAR technology ought to be deployed to get the maximum commercial advantage. We actually think that there will be very significant opportunities. SOAR is probably a technology which was before its time 10 years ago because nobody knew what to do with the data that it produces. That's most certainly not the case now. In a 5G world with the Internet of Things, people understand that data is the new oil, and that's what we're going to be selling to people that we think will get it. Similarly, in TransLogic, our probe revenue, we think has significant growth potential and the opportunity to work with much bigger companies. We demonstrate our confidence with actions as well as words, actions to enable the company to be able to distribute the benefits of its future success to shareholders, but also our actions as directors, in which all 3 of us have bought shares recently, myself as recently as today. This is a story which we actually really believe in, and we're absolutely committed to delivering not only what is forecast, but more than is forecast.
That's brilliant. Nigel?
Whilst you've been talking, the share price went from -2 to +1. So I just wish, A, you could carry on talking, and B, the market hadn't closed.
Listen, thank you.
It's an imperfect, I'll just round up. It's an imperfect market. We have a very, very large proportion of our shares in the hands of happy holders who don't want to sell. So even when people want to buy, it's very difficult to budge the dial on the share price. But ultimately, the tide is coming in and value has a way of being realized. Watch this space.
Nigel, Melvin, thank you very, very much indeed. And I guess through continued engagement, that's the only thing that can be asked, is to communicate, I guess, how you guys are performing, which has clearly been going very well. Thank you very much indeed. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, the feedback page will appear. And if you access this via the link sent to you by email, you'll be asked to log in to provide your feedback. And as I have mentioned, it would be very useful for the company to understand your views and expectations. On behalf of the management team of TRANSENSE Technology, we'd like to thank you very much for attending today's presentation. That now concludes the session, and I wish you all a very good afternoon.